You are looking at a chart of gold on a daily time frame, and we've had a nice movement in gold in yesterday's trading, which is this big, huge green bar. And I think that in line with my previous videos, that we are indeed heading up to take this liquidity. I think that's what the market is reaching for. Okay, there is a very straightforward and easy way that mathematically we can kind of see if our prognosis is in line with the expected targets. And we can do that by just evaluating the current swing, okay? So what I will typically do is take the high and the low, and that range I'll project up by at least 4 standard deviations and see where that comes in at. Now, why this particular swing? Well, that is the most energetic and the most current. That's why that particular swing. So if I need to scrunch this up or go to a daily chart, let's go to a daily chart, you will see that 4 standard deviations comes up here at 2460, okay? However, 3 standard deviations comes in at 2432, which is just above the highest point on my chart. So mathematically, that kind of aligns with, I think, where we're headed. And I think, therefore, this high on the chart is a good level of where the market might be reaching for. It's the highest point on the chart. Obviously, there's no guarantees that the market will get there, but that's a nice and easy way to kind of confirm that the thinking behind this move, the narrative and the directional bias is still intact, okay? Now, that doesn't mean that, number one, it doesn't mean that we will get there. This is just price action forecasting, but there's a method to the way that I forecast. And in this particular case, I'm simply using mathematics to take this range and mathematically project that up by 4 standard deviations, which comes in at that particular high. The fourth one is probably a little too high, but the third standard deviation of that swing comes right in at 2432, which is pretty much on the dot to that particular high. And that's what I'm looking for, some kind of confluence to give me a little bit more confidence that perhaps we are headed up there. As I said, no guarantees. The market can do anything, especially in the current geopolitical environment, okay? That also doesn't mean that we will get there in a straight line. We might have retracements along the way if we are going up there, okay? So the whole purpose of price action behavior is to kind of monitor price and adjust as price adjusts, okay? So talking about order blocks, I do like this one now. Let me see where this has connected to. This is actually probably connected to this one. Okay, so there you go, it's coming down to that one. And we've now closed above that order block. So if we do get any retracements, I kind of like that level for any pullbacks to look for continuations. So I don't know if we are going to come down. We may go straight up. If we do get a retracement, that'll be a nice area. I feel that the institutions would look to go long from that level. So what I would like to see is, we can take this off now because we don't need it. I think we've now kind of mathematically confirmed that is a level that has confluence based on the swing that I showed you, which was from yesterday's New York session. I think that if those highs remain intact and we come down to this level, then I would expect institutions to buy at that level, and that is that we can calibrate that down to 2350 or 2360. So it's anywhere from that high to the midpoint of that particular down candle. So if I take the high and the low, and all I want is just a midpoint of that, that's kind of where I would be looking for institutions to get in. So that's at 2350 to 2365. So anywhere in that range, in my view, would be where the institutions would be looking to take new positions to the long side if the market directional bias was still to the upside, okay? Now, that is only valid, in my view, so long as we don't take out these highs, okay? If we continue going up and take out these liquidities without coming back down here, then that voids this level, which is an order block on a daily chart, okay? Now, that also is void if, for example, we start to get price action behavior that suggests that we are now bearish in a higher time frame like the daily. So if we don't take out that liquidity and we start to get a change in direction on a higher time frame, on a daily time frame, which is what we're looking at, then I would not expect these down candles to hold. So still a lot of analysis to be done as price moves, and that's expected, right? You can't expect it to be such that the market makers give it to you on a silver platter. But as I see it right now, based on narrative, being that the market is reaching for this liquidity that rests above these highs, and that we have come from taking out liquidity below, and so far each one of these down candles is being supported with higher prices, then the directional bias, in my view, is still intact, okay? But as I said, you've got to take it with a grain of salt, okay? The market is very dynamic. The climate's very dynamic. Anything can happen at any time. So I hope that video was useful. It's just a way that I use these key swings at key times, meaning this is a very, very energetic and a very key swing inside of the New York session. I will use that, okay, to try and align where I feel the market might be headed. And so we've taken that swing and we have aligned ourselves with the possibility that this higher target in this price action is still intact and its confluence given that most recent swing. Again, why that swing? Why have I chosen that swing? Because that is the most current and the most energetic, okay? So if tomorrow or then next week we get something that tells us something different, then we need to reassess. I hope that was useful. I will now talk with you in a future video.